to Price This House. I'm Dave O'Neil with Century 21 Spindler & O'Neil.
And I'm Kimberly O'Neil Mara, also with Century 21 Spindler & O'Neil.
We're going to be doing our third quarter review today, which talks about the recent sales for the months of July, August, and September in the 4 communities of North Reading, Reading, Andover, and Lynnfield.
Thank you. Dave's going to get started with North Reading. We're going to go through single family, condo, multifamily, and land sales for that quarter.
Okay, for North Reading single-family homes in the third quarter of 2013, there were 61 properties that were sold. Average list price was $549,000 versus an average sale price of $540,000, and the average was 69 days on the market. That compares to the second quarter of 2012, there were only 44 units. So as you can see, we were up substantially. The average list price was $431,000 with an average sale price of $419,000. So from year to year, we're about $100,000 over for asking price and sale price for an average. But last year we were on for an average of 133 days, where this year it's only an average of 69 days. So as you can see, the market is very, very healthy. North Reading condos for 2013, there were 11 units sold versus 10 last year, which is basically an even market. Average list price last year was $217,000 versus $286,000 this year. $204,000 is our average sales price for last year, and this year the average sales price is $282,000. As you can see, that's quite a substantial increase. Average days on the market last year was 170 days. This year, 27 days. So as you can see, again, the North Reading condo market is very, very healthy. The North Reading multifamily market, for the third quarter in 2013, there was 1 unit sold, versus last year we didn't have any. But again, as we've talked about in previous episodes, there really isn't much of a multifamily market in this town. Average list price this year was $259,000 versus $245,000 average sales price, but the property was on quite a while, over a year, over 424 days. And the North Reading land this year, there were 4 lots of land sold versus last year in the same third quarter was 2 lots. The average list price this year was $437,000 versus $200,000 last year. And the average sale price this year is $393,000 versus $175,000. So as you can see, more expensive, maybe bigger parcels of land have sold this year. Total days on the market this year is 40 days versus last year was 148. Again, giving us a real showing that the market is a lot stronger.
Moving on to the Reading market. For single-family sales for the third quarter 2013, there were 88 units sold. The average list price was $503,000 and a very strong sale price ratio coming in at $501,000. So just, pretty much almost list price for the average of those 88 units sold in the third quarter of 2013. The total days on market was 46. Now, if we compare that to a year ago for the third quarter of 2012, the number of units was 81, so slightly less than this year. The interesting fact is that the average list price was at $504,000, which was consistent with this year. However, the average sale price last year was only $447,000. So you can see a huge increase in the ratio of what the sale price versus the list price was. We had consistent list prices, but this year, 2013, sold much closer to that list price than it did just a year ago. The other thing to note is the days on market was 66 in 2012 versus only 46 in 2013. To echo Dave's comments, just the sign of a stronger market this year because things were selling more quickly than a year ago. In the condo market, there were 31 units sold in the third quarter of 2013. The average list price was $344,000, and interestingly enough, the sales price was a little bit higher than that, $346,000. We do have Reading Woods to take into consideration for that, and sometimes if you have upgrades on some of the new construction, your sales price can be over your list price. So that's going to be the explanation for why that happened this year. They were on the market a total of 31 days on average. If we compare that to a year ago for the third quarter of 2012, the total number of units was 24, with an average list price of $325 and an average sales price of $322. Total days on market was 70. Again, we do have the new construction that's been going on for that amount of time, but as you can see, it's less than half the time that the new units were coming to market and being sold versus a year ago, and then the prices have gone up pretty significantly in that year as well. If we turn over to multifamilies, again, we only had one sell in the third quarter of 2013. It was listed for $360,000 and sold for $343,000. It was on the market for 19 days. Compared to a year ago, we had 4 units that sold, average list of 476, average sale price of 450, total days on market of 50. Really hard, as we've talked about in past episodes, to do a comparison when we only have 1 unit sold this year. So we'll show you the data just for your information, but we won't delve too far into that. In terms of land, I'll kind of echo the same sentiments. We actually didn't sell any parcels of land in the third quarter, and that's just because there's not a lot of land in Reading to be had. So a year ago, we had 2 units. The average list price was $190, and the average sale price was $181. Total days on market was 171. I think that if we, as we have new land become available in Reading, I think you'll see it sell for a lot faster than the 171 days as was seen a year ago. So having said that, I'll turn it over to Dave for the Lynnfield report.
Thanks, Kim. For the third quarter in Lynnfield, we saw a total of 54 units of single-family homes sell versus a year ago of 42 for the same time period. The average list price is $598,000 this year versus $539,000. So that's more than a 10% increase. Average sales price this year is $584,000 versus $517,000. Again, signs of a very, very strong market in Lynnfield. Total days on the market this year, 69 versus 114 last year. Again, properties are selling in about half the time that they took a year ago. The Lynnfield condo market is not very plentiful, so this year we're showing 6 units in total for the 3 months versus 6 units last year. Prices are actually a little less this year than they were last year at $315,000 list price versus with a $307,000 sale price versus a year ago $436,000 and $435,000 for list price. Again, as we've talked about before, when you have a small database, your percentages can really be skewed a lot. The thing I would look at on the condos is days on market. Again, 55 days on market this year versus 135 days on the market last year. So no matter how many units that you have actually selling, the fact that they're selling in half the time tells you that it is a good, healthy market. Again, Lynnfield has very few condos, so again, your data is skewed. The Lynnfield multifamily market is just the same as North Reading we talked about. There just is really no multifamily market there. So we can just kind of go right over that and look at the land sales. Again, very similar to North Reading. Very, very few land sales. There just isn't any new land. So what you have is just a lot here and a lot there called spot lots. This year, from the third quarter, we had 4 units sell, $349,000 list price and $316,000 average sale price, which is a pretty hefty price for a single family lot. That's before you even start to build a house. Again, days on market are skewed because land is the last part of the market that has come back. In the beginning of the year, we talked about the single families were rolling, the multifamilies, the condos, but the land, it really took them a while. So now the land has finally gotten there. 0 units in the same time period last year versus 4 this year. So again, it tells you it's a healthy market.
In Andover, our single-family sales for the third quarter of 2013 had 136 units sell. Compared to a year ago, there were 105 units. So definitely an increase in the Andover market. The average list price went up slightly as well. It went up to $612,000 in 2013 versus $595,000 a year ago. And then interestingly enough, the average sale price increased as well, kind of echoing our sentiments from the rest of the data today. We saw an average sales price of $602 versus the $612 list price. A year ago, the sales price was $579 versus $595. So again, a little bit of an improvement. And once again, the days on market went way down. They were only 52 for this quarter versus 88 a year ago. For Andover condos, we actually had 34 units sell in Andover this year compared to 17 a year ago, and the list price as well as the sales price have increased significantly. The average list price in Andover for the third quarter 2013 was $321,000, and the average sale price was $311,000. So a very strong sale price ratio for the condo market. A year ago, the list price was $276,000, and the average sale price was $264,000. Interestingly enough, the days on market actually increased this year, 133 versus 96. But having said that, there were twice as many condos sold this year, and like you said, that the land and the multifamilies come back at the very end. Condos come back, in terms of strength after the single family. So the single family sales have really kind of come back. Condos were the next to do that. So I think that this is pretty indicative as in terms of the number of units, 34 units selling. It took 133 days on average to get them sold.
If you remember earlier shows this year, the Andover single-family homes were really farther behind the rest of the local community.
Yeah, there was less inventory to sell, so the numbers were actually down just because there were not very many listings. So, so that's definitely goes into that as well. In terms of the multifamilies, there were not any sold this past quarter. There were 2 a year ago, but again, for comparative purposes, when you're comparing it to nothing, it's hardly worth the look. In terms of the land, 2 lots sold this year versus 1 a year ago. 337 this year was the list price. It sold for 340. A year ago, it was 375 and 350. Again, it's hard to say in terms of the size of the lots, the location of the lots. But once again, the interesting thing is a year ago, that land sat for 65 days on average, where this year, between the 2 units, the total days on market, the average was 4 days. So land is really starting to be hot. The builders are all starting to get their confidence back and buying lots as quickly as they can to put new properties up. So it'll be definitely interesting to see how those sell through the rest of this year.
Right.
Now I'm going to turn it over to Dave to start the spotlight homes for the episode.
Thank you. This is the portion of the show where we actually pick one property in each of the 4 communities that we're talking about and really go into depth a little bit about them. We like to show some interior pictures so you really get an idea for pricing and so forth, what's happening in today's market. So for North Reading, we're going to talk about the property that recently sold at 20 Marshall Street. It's an 8-room, 4-bedroom, 2.5-bath colonial, very, very stately home. It's in the Chestnut Village neighborhood down off of Chestnut Street in North Reading on the Lynnfield line. It was listed at $650,000, sold for $625,000, but it was only on the market for 29 days. It was really, really nice condition. It had features hardwood floors, had 2 fireplaces, had French doors that led out to a back patio. The kitchen is very nicely updated. It had stainless steel appliances, granite countertops, hardwood floors. It opened to the family room with a cathedral ceiling, had hardwood floors, oversized fireplace, and again, it leads out to the deck. It sat on a half-an-acre land, which is typical for the Chestnut Village neighborhood, and it was just absolutely pristine condition inside and out. And that home recently sold for $625,000.
Thank you. In Reading, the property that we're going to spotlight is 906 Gazebo Circle in Reading, and that was a 2-bedroom, 1.5-bathroom townhouse, 1,178 square feet, very, very well, very, very good condition, and a very great commuter location right off of Main Street, right off of Route 28 in Reading, right at the 12895 on-ramp. So very, very convenient location. Had a fireplace in the living room. It had a dining area with sliders to a balcony, a large kitchen, in-unit laundry. It had 3 levels, including the first floor was a garage. So it was definitely showed very well, sold very quickly. It was only on the market for 18 days, and it actually is closing in the next couple of weeks for over $300,000. So it's going to sell for above the list price. So a nice little townhouse in a great, convenient area of Reading.
And our spotlight home in Lynnfield is 33 Heritage Lane. It was listed at $879,900, sold for $869,000. It was a 12-room, 4-bedroom, 3.5-bath colonial, absolutely just exquisite brick front colonial with a 2-car attached garage. It does have a 2-story foyer with a bridal staircase, a large eat-in cherry kitchen which opens to a fireplace den, step out to the patio, and a gorgeously landscaped fenced-in yard. It had a nice family room with a fireplace, sliding French doors that lead to a heated in-ground pool, step-down living room and formal dining room. It has 4 bedrooms, 4 baths, including 1 bathroom that was in the 2-car garage. It absolutely is in pristine condition, a 4,600 square feet of living area, which is quite a large home, and it sat on about 3/4 of an acre of land. And again, that was only on the market for 29 days, listed at $879.9 and sold for $869.
Okay. In Andover, the spotlighted property is 215 Salem Street. It was a raised ranch listed for $323. It actually sold over asking for $333,000. It was an 8-room, 4-bedroom, 2-bathroom home with a fireplace, and it did have 1 attached garage space as well. It was 2,242 square feet, and it sat on almost a half an acre lot, just a little bit over 20,000 square foot lot. It was only on the market for 39 days, and again, it did sell for over asking price. So this is kind of like a typical average home in Andover. Great location on Salem Street behind Phillips Academy, and as you can see, that's why it sold for over asking price.
Very nice, yeah. We're now at the point in the show, Talk of the Town. We have 2 special guests with us today, Mike and Kathryn Linnane from the Linnane Insurance Company. We're going to talk about everything that you want to know about homeowners insurance, condo insurance, flood insurance, and we'll be right back.
Welcome back to Price This House. We are now joined for our Talk of the Town by Mike and Kathryn Linnane, and they're going to give us a brief overview of their company, what they do, and we're going to kind of ask you questions as if we were a home buyer, things that we need to know in terms of the home buying process and how you can be of assistance with that.
Well, thank you so much. Thanks again for having us on the show today, Kim and David. Look forward to discussing insurance. It tends to be one of our favorite discussions, topics to think about. And we look forward to try to educate people as they look at the process of not only buying a home, but then insuring probably the most important asset in their lives. My name is Michael Linnane. This is my daughter Kathryn. We've been in North Reading since 1992. Been in the business since 1986, and love serving the community and look forward to continuing that.
Welcome.
Thanks, Dave.
Thank you.
I think probably a good place to start for our audience would be about homeowners insurance.
Mm-hmm.
Can you talk a little bit about the deductible and how that works and how somebody maybe would decide what was a good deductible for them to work with?
Sure. What we recommend is that one of the things with the deductible is obviously how the deductible works. If you have a fire or a claim, the insurance company is notified. They come out, the adjuster comes out and looks at what's been damaged or the loss and take a total loss. They're going to put a deductible on that. You're responsible for that first $250, $500, or $1,000 or $2,500. Typically, the larger deductible that you choose, the less the insurance is going to cost. So we usually recommend $1,000. It's the best because you're going to get a good price point for your policy, and also you don't want to put a small claim in. If you put a couple of small claims in, typically, you've heard it before, the insurance companies are going to probably non-renew you. So we recommend a $1,000 deductible. So therefore, if you had a fire or someone stole something out of your home, you'd be responsible for the first $1,000.
When's a good time to get a homeowner's policy? Is it when you're buying the home or once you've been in a home for a while? I'm sure people change policies over time. Are there certain life events that would kind of be the catalyst for that, or when do you suggest is a good time to review your policy?
It's a great question. Typically, obviously, when you're purchasing a home, most people are going to buy a home, they're going to have a loan with the bank. So the bank is going to require you to protect their loan, their asset, although you own it technically. So what happens is that's the best time. Typically, you're going to get a binder giving you the coverage. The policy will be mailed out a short time after that. However, I think that's a great question because a lot of times people forget about it. Although we try to do a good job at Linnane Insurance to contact people, everyone's busy. So what typically happens is that a year goes by, 3 years go by, 5 years go by, and they don't really think about it. They just pay the bill, and unfortunately, they have a claim and they don't have the right coverage. That's the problem. So what I like to see, try to recommend to people, if they have a change, if they do a renovation, add a room, whatever, do some work to the home, perhaps do the kitchen over or any type of major renovation, they should call their agent and have us review the policy for them.
A lot of times also, I think insureds may forget if you refinance, just let us know because we want to put the mortgage correctly on the policy. If you have a trust, we want to make sure the trust is listed on the policy as well. If your deed changes, you want to make sure that the deed is recognized on the homeowner's policy as well.
Okay. And that would go for home equity loans too. A lot of people go out and get a home equity loan, and they need to list that loan, that lender as a loan too.
Right.
Correct.
Right. How about when you talk about losses, okay? Everybody thinks of a major catastrophe, but what about certain things that happen, the wind, the hurricanes, and so forth like that? Are there certain provisions that you have to have added to your policy?
Well, again, what we typically sell 99.9% of the time is a HO3, which is a special homeowner's policy. And it's a package policy. It takes care of not only the building, your home, your contents, it also your liability. So that if something happens and you're sued, someone falls going down your steps, or someone gets burnt in your home, maybe helping you cook a dinner. So we see this all the time. Someone picks up a pot and they get burnt, they go to the hospital. That's the liability that the insurance company with the policy would take care of, a small example. So the policy we recommend typically for a homeowner is the HO3. It's a special form. And there are some exclusions, like everything else, but the two major exclusions that I usually tell people are earthquake and flood. Those are two that are not included on the basic homeowner's policy. We can add earthquake. It's very simple to add. It's not terribly expensive, but it depends on the value of your home, obviously. And we do recommend that to people. We haven't had any bad earthquakes for quite a while in New England, but if we did have an earthquake, there'd be a lot of people asking, why wasn't I told about this coverage? Typically it can cost, again, it's tough to throw numbers around, but anywhere between $80 to $300 depending on the value of your home. Flood insurance, and we're aware of that and certainly in North Reading because of Martins Pond and Ipswich River. We get a lot of questions. In the last year or two, with all these natural disasters we've had all over the country, flood insurance has really gotten very pricey. So, and basically what we ask people to do when they call in when they're buying a home, typically we'll look it up and see if they are in a flood zone. If you're in a flood zone, the bank is going to require you to have flood insurance. And you could have a situation where the homeowner's policy is $1,000 and the flood insurance policy is $4,000. So it's quite important that you realize that if you're buying a property that you are in a flood zone. It's a federal program. So it's really not competitive. The rate is based on the home, the value of the home, and where you live. The other thing about flood insurance is you have to be careful because if you have a basement, typically in flood insurance, if the basement floods, there's really not a lot of coverage. It's going to cover your boiler, your electrical. It's not going to cover any contents, any renovations you've done down the basement. So a lot of times their basement will get flooded and they'll get the bad news, they think they're covered. It has to go up to that first floor. So that's the thing about flood insurance.
Yeah. Okay. So, but it would cover a furnace if it was in the basement?
Furnace, washer and dryer, that type of thing. Yeah.
Okay. Wow.
But not your contents,
Yeah.
No
That's
contents,
interesting.
no
Not your
walls,
contents.
anything you do down there, right?
Now, can you talk a little bit, now you said HO3, and so I know that HO6 is the policy
Yeah.
for condo. So can you talk a little bit about the difference between a single-family home versus a condo insurance, and then also within that, talking about what you need for the unit coverage as opposed to the master insurance policies?
Sure, be happy to talk about that. Let's start with the master condo policy. It's a lot different than owning a home where you're responsible for everything. Think about it this way. When you get into a condo, there's a master policy that covers the building. And they're all different depending on how the documents are, how the trust documents or the condo documents are written. So think about it this way. The master policy typically is going to cover the building and all the common areas for not only if it burns or the other perils we talked about earlier, it also gives the condo association the liability. The mistake people make is they think that the master policy is going to cover the contents inside. And some are broader than others, but typically we like to look at the condo docs to make sure how the docs were written. And if they're written that you're responsible for, say, the studs in, then we have to make sure that we have the correct coverage on that policy, which should be written in your name. So basically you'd have the liability like a homeowner's policy, you'd have the contents like your homeowner's policy, and you might also have to get some coverage for all the walls and embedments that you make or are made on the condo. It can be a little bit complicated because it depends on how the docs are written. So we like to get a copy of the docs because they're all a little bit different. You know how lawyers are, and review them and then try to blend or make a policy that's going to best suit what you're trying to do.
So typically, and it always can change, like you said, typically, is it walls out is the homeowner, the master policy, and walls in is the unit policy?
5 years ago, I'd say yes. That
Okay.
was typically how it was written. Was 9 out of 10 were written that way. The last year or two, what we're seeing more and more, and I think it's probably because of litigation, is that we're seeing the condo policies, the master policies, are covering everything except for your contents.
So they are covering inside the
They
unit?
are.
Really?
They are.
Okay.
Which makes it much cleaner for the unit owner, because they know that if the place burns down, everything is covered except for when the moving truck moved in and all your contents is taken in, that's what you need to cover. So when you're leaving, it's the same thing.
So if there was a fire that started in the furnace room, the boiler
Right.
room, or what have you, and it came up into your unit, it would be your contents would be needed to be on a separate policy,
Yes.
but your appliances and the flooring and things like that would be covered under the master
That'd
in
be
these
covered.
newer policies.
That's correct. Yeah.
That's definitely
Yeah.
a change.
Yeah, we're seeing it more and more. I mean, it's a minority of
Yeah.
the policies we're seeing, but I think the insurance companies like it that way too, because typically what happens is the master policy insured is looking at the insured's policy to pay for things, so that they get that, everyone's fighting each other for
Right.
who's covered. So if you don't have that argument, then that's the other thing I strongly recommend too. When we can do it, we typically put the master policy and the individual policy with the same company. And the reason I say that is because not only usually there's some discounts involved, but if there is a loss, it's not like company A is going after company B. Company A is on it no matter what. And you have that discussion with the claimant. You say, you guys are on this. Just pay it one way or the other. And that's important.
When I bought my first condo in Boston many years ago, my Uncle David here gave me that exact advice.
Yeah.
He said, it doesn't matter, if it happens in the walls, it doesn't matter which one it is, they're
That's
going to be
right.
the same. So so that rings true. So glad to hear
Yeah.
he was giving me good advice back then.
He's right on.
One question that I had as you were talking, what about like mold? I know in our daily lives, that has become a big thing in the real estate market. How do insurance companies look at that?
That's a question we get all the time, and it varies from policy to policy. It is a covered loss, but very limited now. Think about, Dave and I certainly remember, when lead paint was a big issue. The companies first, it was covered, and then they tried to exclude it. It was very limited. It still is very limited. It's the same thing with mold. There is some limited coverage under the homeowner's policy. Some companies offer, you can expand that, you can endorse the policy to add additional coverages, but typically it's a coverage that it's a tough one. Yeah, and it's something that's why a lot of times what we see is years ago you had a leak in the bathroom, and the claim would be, say, $500 to $1,000. That same scenario today could be $5,000 or $6,000 because everyone's aware of the mold. And the insurance companies are too. They don't want to have it, painted and have the mold in there, and then all of a sudden it becomes a problem. So more and
the
more.
contractors need certain certifications to remove it, so
Exactly.
everything's just kind
Exactly.
of gotten pricier and pricier.
So your question is, ask your agent, how much the policy has for a limit on mold, and we can also increase it. But it's a coverage that is it's tougher and tougher to get as time goes on.
Okay. All right, well, let's change the topic a little bit, and let's talk about equine insurance.
Sure. So we offer two different coverages for equine insurance. We offer mortality, which is essentially a life insurance policy. It's based on the value, the age, the breed of the horse. And then we also offer major medical, which is medical insurance for the horse. A lot of times, for a human, we may get colic and or what we consider heartburn, and it's fine. We're fine the next day. With a horse, if they get colic, it can be deadly. So this insurance is very essential for anyone who owns a horse. Aside from those two coverages, we also offer stable liability. So if you're on a horse and your horse injures another person or injures property of another person, it's covered. And a lot of times we have $1 million liability or $2 million liability.
Is it required to be an owner, or is it just something that you obviously encourage people to do?
We encourage people to do it. If you're a horse owner, you should have at least major medical coverage and mortality. If your horse is stolen, the mortality also would replace the horse, the value. So it is essential, but it's not required.
Okay.
Okay. Now, North Reading, there are still a few houses that have individual horses and barns and so forth. Would something like that be covered under their homeowner's insurance, or how would that work? Talk about an umbrella policy for liability. Would that carry on equine liability as well, or how would that work?
It would not. It's separate. Homeowners, a lot of homeowners' standard policies actually exclude farm, or they exclude anything related to horse activity. So if you don't know that and you're a homeowner and you only have homeowners insurance and you have a horse on your property, be careful because it could be excluded.
Okay. Okay, that's interesting. How about taking advantage of discounts that might be available? What type of opportunities are out there for homeowners to maybe save on some of the all the insurances that they need to buy?
Sure. So we're hearing this buzz term that's going around right now. It's called bundling. And if you've heard it, you're calling your local agent hopefully and asking about it, because what it essentially does is it provides discounts. So you can bundle both your home and your auto insurance with one carrier. And right now we're seeing a savings, a big savings. It can save you anywhere from 20% to 10% on your auto insurance and your homeowner's insurance.
Wow, that's a lot. Yeah, that's a lot. Good.
It's significant. The other thing is that I encourage, it's going to be hopefully a lot of North Reading and Reading people watching this, particularly North Reading. But it's something that we're trying to do every month, to get people, reach out to people, email or talk with them, to call us to see if we can bundle it to save, save money. Sometimes you can't, because sometimes there's a certain type of something. I'll say there's an animal or something, a farm that one company will write and the other one won't. So you still have different companies that specialize, but it really does work to most times your advantage is to bundle the policies. The savings can be significant. So we're trying to get people to look at that, but everyone's busy, and when they get a call from the insurance agent, they don't always call back. So we encourage people to pick up the phone, or when they get the renewal, to call us and or call your agent and say, does it make sense for me to start thinking about packaging?
Okay, you just mentioned about animals. What about the typical house animal, like a dog or something like that? If they go out and bite a kid in the neighborhood, does that come under your homeowner's insurance?
It does, and I think it still is. I'm pretty sure it's the most common claim in the United States.
Really?
There are restrictions. There's some certain types of dogs, obviously pit bulls and a few others, German shepherds, that a lot of companies will not let you have a policy with them. They'll exclude it. So if they find out that you have a German shepherd or a dog that's on that list, they're going to non-renew it. So that's very important for most people. It also reminds me of another situation that we see a lot, trampolines. A lot of people have trampolines, and 9 out of 10 companies, they don't want you to have them, and if they know you have them, they're going to non-renew you. So I always ask people to call. That's one of the things Kim talked about. When should you contact your agent? When should you look at it? Something like that. If you're thinking about getting a four-wheeler for your 5-year-old, a 10-year-old, and any of those type of things, you should really call the agent and say, does this make sense, or do I need to get insurance for this?
Okay, so you're saying a family decides, well, let's get a dog. They should really call the insurance agent and say, we now have a dog?
Yeah, I think it's great just to check in, just to say, and we're going to ask questions about the breed, and we have a list, and again, some companies are more liberal than others. So we can kind of place the coverage with the company that's more comfortable with that type of a breed.
If any of our viewers do have questions, we're happy to forward them along. You can email us at price.thishouse@century21.com, and we'll forward those questions along to you for your response.
That'll be lovely.
Thank you.
Well, thank you so much for joining us today. Please stay with us. We'll be back in a minute. Well, that was great. Mike and Kathryn are very, very knowledgeable. I'm glad that they could join us this time. We're now going to move on to our Beantown and Beyond segment, where Kim will talk a little bit about the properties that are selling around Boston.
Sure. The property I'd like to spotlight today is 925 East Broadway, Unit 3 in South Boston. A beautiful and very rare east side penthouse unit with 3 bedrooms and 2 bathrooms. The majority of the condos that are built in South Boston are 1 and 2 bedrooms. So to have a 3-bedroom is actually quite rare. It also has a master suite with a second bathroom. Everything is, marble, a beautiful, beautiful kitchen, French-looking kitchen. Everything's done in off-white. cabinetry, granite counters, and island. And this property is just a few steps to the beach and Castle Island. It was built brand new in 2010. It's oversized, ready to move in, open concept. And the best thing about this property is the roof deck. It is a sprawling roof deck with city views as well as the views of the ocean. It's really, really spectacular. We listed it for $649 and it sold the first day at an open house for over asking price. So the sellers were quite happy with that. The one thing to kind of just portray is that we did also have to have the bank appraisal happen. So what's happening is that, especially in the city, and we're seeing it in North Reading and the surrounding communities as well, but things that are priced well are selling quickly, and so you end up having a bidding war and things get bid up over asking price. And that's all fine and good as long as it can appraise at the bank. So if you're selling or thinking about selling and you are in a situation where you price it to get those multiple offers, keep in mind that if you do accept something that's over the asking price, it's not really official until the bank comes in with an independent third-party appraiser to review what the price should be. Because unless it's a cash sale, which are few and far between, if it's a cash sale, then good for you. If it's not and the bank's involved, then the appraiser has to also agree to that price. So, we were very cautious in terms of looking at how much people are putting down, and if it gets bid up too high, you're kind of talking funny money anyway, because if it doesn't comp out to other recent sales, then the seller's going to likely be the one that has to make the adjustment because the bank's not going to loan on that higher number. So this one came in slightly over asking and the appraisal came in spot on. So we definitely did our job on that one and priced it well and moved it quickly. So beautiful unit, $649 in South Boston, and we'll have some more to talk about on the next episode.
Great. Isn't that a beautiful, beautiful property? Now we have our question and answer period, and we basically had two questions that came in during this last period. Kim, do you want to talk about the first one?
Sure. I had a viewer ask about timing, and typically in the fall market, the fall market is hot, from Labor Day until about Thanksgiving, and then during the holidays kind of quiets down a little bit again. And their question to me was, is it okay for us to list at the end of October, early November, or should we wait until the spring market, which is typically the best time of the year? And so I gave them my answer, but I'd love to hear what your answer to that question would be as well.
Sure. I always tell people, the traffic may be less, but anybody that's out in the wintertime, maybe picture Christmas week looking at homes, it's the same person that might be out the 4th of July. You're not going to have a lot of people, but you're going to have somebody that's very serious. They're not going to be wasting their time. Compared to the height of the spring market, people say, let's go out, it's a nice day, I want to get out, but it's really not beach weather yet. So they go out and they go to open houses just to kind of look. But somebody that's out looking in a cold or in a winter snowstorm or something, they're a sincere buyer. Same thing in the heat of the summer. So if you have somebody that is interested in your property and they come through during the winter time, it can be just the same as the summertime. It can be a real good buyer for you.
Yeah. And my answer was that typically things do slow down a little bit. However, last year we didn't see that because the market was kind of so bad for the few years before that last year we were doing just as many sales in November, December, January, February as the rest of the year. And so we haven't really noticed any sort of slowdown yet. I wish we had a crystal ball so we could predict what's going to happen in the future and for next spring. But things are hot right now. So if you are considering selling, I wouldn't be hesitant to put it on now because we have the holidays coming up, because the market has been so strong. I would say that now is definitely the time to do it. And like you said, the buyers are definitely still out there.
I just attended some national meetings from Century 21, and the economists that they had talking said we're good for another 5 years. The national economy should be strong in the housing sector for 5 years, which is very, very encouraging.
That's great. That actually is a good segue into the second question that we received, and this has actually been just in the last couple of days. With the government shutdown, people are concerned that if they are selling, that their buyers are not going to be able to qualify for all of the government-backed loans, and then if you're a buyer, what that exactly means. So I know that you've just been to some different meetings, and we've both kind of been reading up on it. Could you share with our viewers the concerns and how valid they are?
Well, what I've been told, and I've been asking every lender that I know, is it affecting what we're doing? And on the most part, it is not affecting. Fannie Mae and Freddie Mac, which are the secondary mortgage market vendors of money, are not affected. Okay, they're quasi-governmental. They're running on their own, so it's not really being dictated by the national shutdown. However, a big part of somebody financing, they sign a form that the bank has the right to verify their tax forms, and the IRS is not open. So if the bank wants to verify tax forms, that may hold up a closing. So that's something you really want to check with your lender. And then the only programs that I've heard of that actually are loans not closing are USDA loans. Now you think of your meat and everything being the USDA, but there is a finance arm to that department. So if you have a USDA loan, they are not closing right now. But other than that, everything else is still on track, and everything else is closing, and we don't see any reason that they shouldn't
So
continue.
FHA loans, VA loans, they're all still being assigned loan numbers, and they're still being processed
Right
and
now
things
they
like
are,
that.
yeah.
So again, we're right now, as we're taping this, we're only a few days into the shutdown. So depending on when you're watching this, things may be resolved or they may
Right,
not. So
right.
things may change. But currently, the first week in October, that's what we're hearing.
And the IRS is a major thing because a lot of the lenders do want to verify your tax returns, and if they can't do that, then you're going to be put on hold.
So 2 great questions from our viewers, so thank you very much. If you have any questions for us, please submit them to price.thishouse@century21.com, and we'll be sure to answer them on air for you during our next episode.
Now for our wrap-up, which is our segment where we give you something to think about, we actually talk about the current listing. And what I'd like to talk about today is the property at 25 Cedar Street in North Reading. It's a beautiful 10-room, 4-bedroom, 2.5-bath colonial sitting on 2+ acres, has its own tennis court, has a beautiful above-ground pool, has a 16 by 20 storage shed, has a second bike shed. It's just a fabulous home. It has about 2,700 square feet of living area with an additional 600 square feet downstairs in the lower level. It has a recently updated, absolutely beautiful kitchen, has an oversized island, has a bar refrigerator built right into the island, has a second sink, has a warming tray. It's absolutely an exquisite property, and it's listed for $699,900. Again, 25 Cedar Street in North Reading, currently offered for $699,900. So if you're thinking about maybe making a change, this might be the home for you. Feel free to give our office a call. Yeah.
Thank you, Dave. And thank you very much for watching. Stay tuned next time where we'll be doing our year-end spectacular show, reviewing the entire 2013 year. If you do have any questions in between now and then, please feel free to reach out to us. And once again, thanks for watching. Price This House.